Friends, welcome to Yadnya Investment Academy. Through comments on various topics discussed on our channel, questions were asked and clarifications requested on how exactly an SIP compounds. And this video intends to throw some light there. Now we all know what compounding is, right? When returns on your investment start earning returns in turn, it's called compounding. Now it is very simple to visualize in case of fixed income securities like FDs, where the interest that you're getting is fixed. Your investment is fixed like this. Now what you see in front of you is a recurring deposit compounding at an interest rate of 8% per annum, where the investment amount is 10,000 rupees each month and the investment duration is 16 years and 1 month. Now the duration might seem odd, but ahead in the video, I'm going to compare this with an actual SIP example which has created a corpus of 1 CR with an investment of 10,000 rupees each month for the same duration. The blue line indicates the amount of investment done, which keeps increasing by 10,000 rupees each month. And orange line indicates the value of your investment, which you can see has an exponential rise in the later part of the investment duration, and this happens due to power of compounding, as the returns earned over the period of time have now started earning more returns. Now that we have seen the graph looks linear in case of fixed income securities like recurring deposits here, let's move on to see how the graph might look in case of a market-linked investment option like mutual funds. Now what you see in front of you is the value of investment of a 10,000 rupees SIP in Franklin India Blue Chip Fund, which is a large cap fund from 1st of January 2001 to 1st of January 2017. Similar to the recurring deposit graph, the blue line here indicates the amount invested and the brown line here indicates the value of your investment into this particular fund. As you can see, the brown line here is not as linear as you could see in case of a recurring deposit. In case of recurring deposit, the interest was fixed, but here the returns are market linked. In case of mutual funds, the compounding effect is evident from the NAV of the fund. This is the graph of NAV of Franklin India Blue Chip Fund over an investment duration. And as you know, the value of investment moves in tandem with that of the NAV, and that is why the graphs of the NAV and that of value of investment look same. At any point in time, the value of your investment would be the outstanding units you have of that particular fund multiplied by its NAV. Now, the NAV of the fund is a reflection of its portfolio. The portfolio holds stocks, and in case of hybrid funds, it might also hold corporate debt, certificate of deposits, etc. Now, the portfolio of the fund is never constant. It keeps changing. Whenever some stocks gain, they are sold to book profits. Some corporate debt and certificate of deposits would mature and you would get the corresponding interest. And this is how the portfolio of the fund swells. The gains made via selling of stocks or the interest received is reinvested into better securities on your behalf. And this is how the portfolio of the fund grows. That is, your portfolio grows. And this is reflected into the NAV of the fund. When investments were started in Franklin India Blue Chip Fund on 1st of January 2001, the NAV of the fund was 22.34 rupees. That is, 1 unit of the fund could be bought at 22.34 rupees. And when the investments were redeemed on 1st of February 2017, the NAV of the fund was 390.47 rupees. So this rise in the NAV depicts compounding effect in case of investments into mutual funds. Now again, NAV is something against which all the returns are calculated, be it weekly, monthly, trailing, calendar returns, etc. But if you look from a broader perspective, even this graph is linear. But if you try to track it on a daily basis, monthly basis, a slight fall in the NAV would definitely keep you worried. So the right thing to do is, at the onset itself, select a good fund based upon qualitative and quantitative aspects of the fund. And once done so, keep a disciplined approach towards investments. Keep tracking the performance of the fund against the benchmark on a quarterly basis. Don't look at the NAV on a daily or a monthly basis. You should ignore a year's bad performance of a fund which in the long term has always given you good returns. Just for the curiosity of the people who want to know how a 10,000 rupees SIP can create a corpus of 1 CR, we have plotted the growth of the fund as well as the RD in the same graph. Now the grey line is the growth of your RD, yellow line indicates the growth of your fund, and the orange line indicates the amount you have invested. For a total investment of 19.3 lakh rupees, the RD could create a corpus of around 40 lakh rupees, and Franklin India Blue Chip Fund at a CAGR of 18.84% on a per annum basis could create a corpus of 1.056 crore. The value of the fund corpus is calculated as per redemptions done on 1st of February 2017. So friends, hope we were able to explain how SIP compounds through this video. Let us know your feedbacks. Thanks for watching this one. Watch this space for more such topics. Until then, happy investing.